Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're talking about using a buy and hold stock, a stock we typically buy and hold for the dividend. And yeah, we'd like to see some stock appreciation, but for the most part, it's being held for a dividend play. We're going to collect that cash flow every 3 months. That's why we buy and hold it. I'm going to show you how I use Procter & Gamble, and I did this for years. Finally decided to cut ties with Procter & Gamble. We had our shares taken away. I wrote a covered call, had my shares taken away, all that money deposited into the account, and now we're using that money to generate a monthly dividend check using a stock I'm going to show you. And the rest of it, I'm taking, buying a stock, writing an in-the-money covered call, and we're generating some 3 times what I would have made had we kept Procter & Gamble. So what I want you to do is sit back. If you don't know about writing covered calls or even monthly dividends, I want you to sit back and enjoy, because this is what we do to generate cash flow to then buy monthly dividend stocks that turns into a passive income strategy. We take a semi-passive income strategy, buying a stock, writing a covered call. We take those profits and put them into a monthly dividend stock, which turns out to be a passive income strategy. That's what we're going to talk about here, and I absolutely know you're going to love this one. So let's go ahead and get to this. If you like anything you hear today, I want you to subscribe to the channel. For all you retirees or anyone that needs cash flow, you'll want to watch my videos, because I'm in retirement. December 2022, I retired from the 9 to 5, and I basically became a professional stock trader, selling premium and collecting monthly dividends to support my retirement. This is what I do. So if you're out there on YouTube watching the different financial guru guys, just understand that I'm in the mix. Whatever you see here is what I'm doing, because I come back on YouTube to show you my trades. We talk about them, so maybe you learn something. So I don't do any hypothetical trades or go to Wikipedia and pick the top 10 best dividend paying stocks to hold forever. What you're seeing here is something that just happened last week. We're knocking it down, and you can ask me any questions. So look, if you like this video, bang that like button. It lets me know you like what I'm doing. So what we're doing is this. I want you to focus right here. That's a Procter & Gamble trade. You see it right there. Procter & Gamble was trading at about 149x, and I wrote the 155 strike. Let's take a look at Procter & Gamble's chart, because I need to explain this to you. This is a buy and hold stock I've held for over 12 years. Its sole purpose was to generate a dividend and put it in the account every 3 months. Since I've owned it, Procter & Gamble, it has doubled from some $75 to $155. And although I was satisfied, I decided we're going to change things up. As you can see, Procter & Gamble trades basically in a range, and you could bank on this for the most part. This goes all the way back some many years ago. And Procter & Gamble pretty much does this every single 3 months. You could see every time there's a dividend, look at how it trades. Literally up and down. That's a beautiful trading range, and I love that they paid the fat dividends along the way. I got lucky that it did double since owning it, but now it's kind of stagnant. And yeah, it looks like it might break out here, but the reality is it hasn't traded in the 160s for a long time. So for me, I owned about 300 to 500 shares and usually put in about $300 every time a dividend check was sent. Well, I've decided to change this up. So my last trade, I decided when Procter & Gamble was trading at 149, I was going to go ahead and sell the 155, letting someone take my shares at 155. I went ahead and did 3 contracts, or on 300 shares. When it was trading at about 149, and when I placed this trade, Procter & Gamble broke out and moved higher. So I was going to let my shares go, because remember, I did say the 155 strike, and now it's trading above 155. It ended at 157x. So I went ahead and let them take my shares. Now, before I move on to what we bought to replace that dividend, that monthly dividend, I want to talk to you about this particular strategy that I use. I use this strategy called doubling my dividends using a buy and hold stock. This is going to interest some of you that have buy and hold stocks, but you'd like to generate a little extra income while you're holding the stock. So this is what I do during a stock's off months. And what I mean by that is every 3 months, a company has what? An ex-dividend date and an earnings. We don't want to write covered calls during these moments because this is typically when the stock will trade more volatile. Stock like Procter & Gamble is not going to move one way or the other, but during earnings and an ex date, it can really move. So for the covered call writer, you usually look to write covered calls on a stock 2 months in a row, and then on that third month for which you get the earnings and ex date, you'll take a pass. And then after earnings and after the ex date, you jump back in. Do it for the next 2 months, repeat and rinse. This is why if you had multiple buy and hold stocks, you could use Procter & Gamble this time and then next time and then wait. During that wait period, say you had Merck or Bristol Myers, you can write a covered call on them while you go through the off months of a company's earning report and dividends. So every single time the stock would get to its high, notice the range here, every time it would get to its high, I would write a covered call because it would be likely that it would fall. And when it falls, that premium that I get, if you remember, I got 68 cents. Well, as the stock is not going to reach the strike price that I picked and it falls off, well, so does this 68 cents because it's not likely that the stock's going to finish at or above the strike price. So I cherry pick. I pick up the 68 cents, the stock starts to peel off, and I keep that 68 cents, doubling my dividend. See, they were going to pay me about a 70-cent dividend. Well, during the off months or the months that they don't have a dividend, I'm able to cherry pick a nice little covered call near the top of the range and collect what is basically equivalent to a company's dividend. And that's what I love to do. In this case, I decided we're going to let my shares go away, and it did go above 155. So somebody's buying my shares at 155, and that cash is being dumped into my account. Turns out it's $47,000. So that ends this buy and hold trade I've had with Procter & Gamble for the past 12, 13, 14 years. But here's the deal. We have a plan. We execute the plan. I'm now going to take all of this money, and we're going to do something. Remember what I told you? Procter & Gamble paid me about $300 every 3 months. So what I'm going to do, I'm going to buy enough shares of a dividend-paying stock to generate that $300. And in this case, I decided to buy about $8,500 worth of the QQQY. Now, the QQQY is an options-based ETF. And here's the deal. They use daily options to generate their monthly dividend. So they're out there writing options against the QQQ. And they're able to generate massive income with what they're doing. So they're paying an unbelievable amount in dividends. The very first payout was $1.10. This is per month. The next was $1. After that, it was 93 cents, 62 cents, and they recently kicked down an 80-cent dividend. So here's what I'm going to do. I'm going to go ahead and buy about $8,500 worth of QQQY. Now, this is going to put potentially $300 a month, not every 3 months, a month in the account. And that satisfies that first portion of the plan. Remember, I'm not just going to sell Procter & Gamble and not have a plan. I want to replenish that monthly dividend with something else. So with $8,500, I bought all those shares. I think it equaled about 500 shares. And now it's going to give me $300 a month. Yes, that's a month because they pay such large monthly dividends. Now, this is not a recommendation for you to be buying anything I'm talking about. You have to put in your due diligence to understand that these new age ETFs that use options to derive their dividend, they're a little more volatile. You can actually see that QQQY has fallen, and it's probably going to continue to fall. Notice the volatility every single month. This thing will hop, and most dividend investors won't be happy with that. I know, man. I've been using closed-end funds for years. I invest in CHI, CHY, EOS, ETV. I get it. You want that stable closed-end fund that barely moves, pays you the 10 cents a share per month. You can live large. Well, if you're going to try to collect more and you're going to use an ETF like QQQY, going to have to deal with a little more volatility. Now I'm in the options game, so I totally get this. I don't even look at QQQY's share price. As long as it kicks me down that $300 a month, I'm going to be happy. That executes part one of this trade, where I took my Procter & Gamble money, this buy and hold steady Eddie, paying me that every 3-month dividend. I replenished that dividend with this purchase for $8,500. So now with that settled, with that $300 settled, let's go ahead and take the rest of the money and make an in-the-money trade that I'm going to show you right now. Now, I have a membership, and all my members see this. What you're about to see is what my members get. When we write covered calls and sell cash secured puts, use the poor man's covered call, or buy monthly dividends, I send that to my members because you're seeing the world through my eyes, a successful active trader. I've been doing this membership since 2019, and I'll tell you what, the membership is blowing up because more and more people want to generate monthly dividend income using covered calls. You can own a stock, write a covered call, and you literally printed money. That's not snake oil. You literally own shares, you write a covered call, you take the premium profit, and you buy monthly dividend paying stocks. That's the idea, man. That's the wealth mindset. Well, my members get that. And they get exclusive videos that you don't see here on YouTube. So I want you to join. Go to cptdashboard.com, cptdashboard.com, click the upgraded dashboard. I got a 1 free month offer for you because the next email I send to the members is going to be a trade alert for which I'm going to get involved in this coming week. And I'm going to tell you exactly the monthly dividend stock I'm going to buy with the profits. cptdashboard.com, click upgraded dashboard. Now this video is getting a little long, so we're going to speed it up. Here's the deal. Remember I had $37,000 left from that trade that I did on Procter & Gamble? Well, this is what we decided to do. Having the QQQY going to deposit some $300 a month into the account, satisfying the dividend portion of that buy and hold for Procter & Gamble, it's time to play. So I have $37,000 and I'm going to use TNA, which is a 3x leveraged ETF, to the small cap Russell. And what we're going to do is we're going to buy shares and then write weekly covered calls. And they're going to be in the money. So we're getting a little downside protection. Give me a little runway here to explain this to those that might not know the covered call. I'm going to buy the stock TNA. And in this case, I paid $33.73. So let's say I buy 1,000 shares, which I did. As you could see, 10 contract that I sold. So I'm going to spend $33,730. What I do is this. I give the greater stock market the chance to buy my shares at $31.50. That's cheaper than $33.73. So you're saying to yourself, how are you making money? Well, you're making money because they will pay me for this right to buy my shares at $33.73 in 4 days, $3.05. So do the math. When you subtract where I bought the stock, where I'm giving it away, and you include the premium, you can see that there's intrinsic value between the price I bought it, the price I'm selling it. Everything extra is my profit. And that's where we're getting the $720 on this trade. So this is what I do, and this is what we're going to do. We're going to go ahead and buy a stock like TNA. We're going to buy it wherever it's trading, and we're going to write a covered call, an in-the-money covered call. Here's an example of one I just did this past Friday. It expires this coming Friday. I'm going to pocket $450 if this person takes my shares cheaper. Again, this is called the in-the-money covered call. I bought the shares at $37.50. I bought 1,000 shares. I'm going to give somebody the right to take them away from us at $35, and they gave me a $3 premium. That's a 1.29% cash on cash for 5 days. If you subtract the $37.55 from $35, that's $2.55 of intrinsic value in the $3 they paid me. So nobody makes money there. The 45 cents is my profit. That's the time value profit in this trade. And when you multiply that by 1,000, that's $450 in this small 5-day window. What I'm hoping for next Friday is that the shares close above 35. And if they do that, I'll have my shares taken away, the money put in back into my account. I keep the 45 cents. We move on. And we do this time and time again. And what I'll do is take this $450 and buy a dividend paying stock just like the QQQY. And real quick, this is what I did on this closed trade. I went ahead and bought 40 shares of PYPY using a covered call, taking those profits for which I just printed money and bought a dividend paying stock. It's called the wealth mindset. And what we're hoping to do is have a little dividend tree garden where all of these little dividend trees keep kicking out the monthly dividend to where we can basically sustain retirement passively using passive income monthly dividend paying stocks. Hey, look, I hope you learned something in this video. I hope I motivated and inspire you to have the wealth mindset like me. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.